presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the October 7th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. It's absolutely fantastic to be with you here this morning. I hope everyone had a magnificent Monday. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. Of course, one of the best ways that we can start off our day is to always remember that the quality of our life is found in meaning. That's right, meaning. And the cool thing is that you and I, we are the ones in control of that meaning. And when it comes to technical analysis of a stock chart, it's really all about meaning. And today, as I do every day, I'll provide you with what I believe is the meaning behind what traders and investors are doing. You know, to a certain extent, just as in life, you and I have to be a psychologist. And that means we have to interpret emotions, the emotions of the buyers and sellers, the bulls and the bears. You see, the quality of our life is based upon the quality of our emotions. The quality of a stock chart is based upon the quality of its emotions, too. I say change your emotions, and you can change your world. So during the next couple hours, I'll use tools that help us identify the emotion of a market. Tools like that lightning bolt pattern, that A to B equals CD tool. Tools like Fibonacci expansion and retracements out there. Tools like Japanese candlesticks. Tools like counting those peaks and troughs. Tools like the TAS market profiles and tools like the Rhodes momentum trading signals. Each of those help us to measure the emotion of the market. And in life and in the market, that's really what it's all about. Now, this show here, it's an interactive show, and that's a beauty. The reason why is because I want to hear your emotions as well. That means you can give me a call at 877-927-6648. Internationally, you call me at 727-445-1044. Together, you and I, we can both be psychiatrists, psychologists. We can go hunting for bulls and bears. We can go interpret the emotion of the market. Hey, It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow futures trading off 41 points, trading out at 16,861. S&P down 4.5 points, trading out at 1951.50. NASDAQ futures off 7 points, trading out at 39.99. Russell 2000 off 3 points. King dollar back 2 pennies right now. She's trading out at 86.02. Goldilocks up 70 cents, trading out at 12.08. Silver up 2 pennies at 17.24. Light sweet crude back 14 cents, trading out at $90.19. A quick peek across the globe out here. We're going to find Oktoberfest in Germany. They're having a bit of a pullback this morning, off 48 points out here, down 0.5%. FTSE off 0.4%. It's down 28 points. The Nikkei was off 107 last night. The Shanghai up 6. The Hang Seng up 107, up about 0.5% out there. All right, so to measure the emotion of the market, as you know, if you've been a listener of this show, you know that I'm calling for a significant market bottom. That significant market bottom is one that I believe formed this past Thursday out here. And so I've gotten a number of emails, a number of cards and letters out there asking me why, asking me to go through the markets as I see them, maybe one step at a time, just to give you a feel, because it's not really Stevie, okay, that's bullish here. It's what I believe the emotion of what the stock charts are communicating to us. But the key here is you've got to remember time frames out here. So let's go through this step by step and take a look at the time frames. Now, one of the keys here is that we're going to start with the larger time frame first. The larger time frame is the larger trend. You can't argue with that. The larger time frame, the larger trend is going to take much longer to turn. So you're going to see a turn on a 10-minute chart first, before a 30-minute chart, before a 60, before a daily, before a weekly, before a monthly, and so on. Now, let's start off and take a look at the S&P 500 specifically, and I will flip back and forth between the index and the futures contract out here so that we can keep things current. But let's take a look at the S&P 500 on a monthly chart. First chart I'm going to put up on the screen. This is part of the Rhodes Momentum trading signals out here. So we're looking at a monthly chart for the S&P 500. Closed out yesterday, at 1964.93. Hopefully you're watching us on TigerTV. Maybe it's on your mobile device, your pad, or what have you. If you are listening on the radio or at TFNN.mobi, thanks so much for doing that. Don't forget, you can catch the archive of this show on Channel 9, on Tiger TV. Of course, you can download it on iTunes. So many different ways for you to take TFNN with you out here. We're taking a little, I'll describe to you what we're looking at. First of all, the thing that I want you to notice most, and you see, it doesn't really matter what chart it is that we're looking at. These patterns work the same. That's the beauty of learning different technical analysis tools. They work on any chart. So it doesn't matter whether it's an index, whether it's an ETF, whether it's a currency, a commodity, they all work the same. So the first thing that we're noticing here that you should notice, or that I'd like you to notice here, is that the S&P, not we, but the S&P 500 had been traveling in a 16-year, 800-point consolidation range. That consolidation, let me get my crosshairs out here. That consolidation from about the 1576, 1550 type area, that's the top of the consolidation, down to about the 775 level. That's the lows that we saw back in July of 2002. Those are the lows that we saw back in March of 2009. Yes, it did pierce a little bit lower, but let's just give this approximately an 800-point, 16-year consolidation. And in the case of the S&P 500, on a monthly basis, it broke out of that consolidation. It broke out of that consolidation back here in March of 2013. Came back and tested it the following month, and then it's been off to the races. Now, if you add 800 points to that 1575 type area, what you'll get is a price projection of 2350 out here. 2350 is where the S&P index wants to get up to in price. What we have seen thus far, so the move to the upside is not over. The question is the move to the downside over? And I don't know the exact answer to that. I believe that the low that came in last Thursday was indeed that low. If that gets taken out, guess what? It wasn't that low, and there will be another low that will form out there, and we'll take a look at it at that stage. But the high so far that we've seen in the S&P, that took place last month. That was at 2019. The S&P wants to make that measured move. It wants to get up to the 2350 level. Is there anything that can get in the way of that happening? Well, there can. associated with the tops back in 2007, back in 2000, was Stevie's price relative strength divergent pattern out here. And that is a possibility. Now, in the month of September, which is the worst month, yes, there have been a number of October surprises, but let's just take a look at probabilities. What I want you to do is I want you to be a master of probabilities out there. It's my newsletter service, Mastering Probability, because when we master probability, it gives us an edge, and really it's all about being able to get an edge. And in the month of September, if you go back historically and you take a look at probability-wise, you'll see that September historically is a worse month than October. Yes, there's the October surprises, just like Reggie Jackson, Mr. October, just like the October 9 in October 9th this year. When is that? That's in a couple days out here. We see who's going to win the Texas Hold'em jackpot out there. But what we're really looking at here, let me get back on track, is that in the month of September, the worst month of the year, it did not give us a reversal signal out there. And this month, it's too early to say where we're at from a monthly chart out here. But what I can tell you, if we take a look at the monthly chart, is you'll see the blue colored in area out here. That's my part of my Rhodes momentum trading signals out here. Blue skies, real blue skies out here. No bearish reversal signals at all on the monthly basis. So 2350 is the number that you've got to put down on a pad of paper until we see some other kind of reversal on a monthly chart out here. If we go take a look at a weekly chart for the S&P 500, the weekly chart, if we take a look at last week's, if last week we had seen a larger decline from the prior weeks out here, last week's candle would have been considered a hammer candle out there. But we can't consider it a hammer candle. There was not enough of a decline coming off of those highs that we saw back here September the 19th. The September 19th high again in the S&P 2019-26. But that doesn't mean I'm ignorant and that I'm not going to pay attention to a candle that looks like a hammer, smells like a hammer, but is not a hammer candle out there. It's still, all that really says to me is that I can't use that low as a significant low from last week out there. But I can say, you know what, it is the bulls here were it was not the bears that won that session last week. It was the bulls that won the trading session for the week. If we take a look at a couple moving averages that are on my weekly chart out here, I like to use the 8 and the 13. Why? Because they're Fibonacci numbers out there. That's why. And when I take a look at the 8 and the 13, they're still in bullish formation out here. I can give you the number of head fakes that we saw. We saw a head fake the week ended June 28, 2013. But we never saw a crossover of that moving average. We don't have a crossover as we speak right now. If we do, then I say, hey, you know what? There's more bottoming there's more bottom work to be done inside of the marketplace. Until we get that, I have to take a look at what the chart is telling me, what the emotion of the chart is telling me, what the emotion of last week's candle is telling me, and that is telling me that the bears do not have the upper hand, at least not just yet, not so fast. Now, if we take a look at a daily chart out here, let's go take a look at the daily chart for the S&P 500. Let's understand what it has done from its swing point low out here on August the 7th. If we go from that low, which is out at 1904.78, excuse me, up to the high from September the 19th, again, 2019-26. What also took place last week is a move down to the 0.786 retracement level. 1929.28 would be the exact number. What we actually saw was a move down to 1926.03. A 0.786 retracement. That's a normal level where price in a bull market, that is a nice retracement in a bull market. Oftentimes you don't get that. You got a 0.786 retracement. On Friday, you got a bullish reversal signal out here. Yesterday, we saw a move higher. We saw it pull back a little bit on late volume out here. We get back. We'll continue looking at the S&P 500. We'll look at the futures contract.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Welcome back. Right now, we've got the Dow futures off about 78 points, S&P down 8 1/4. And so now let's go take a look at the S&P futures right now. So let's go take a look at the daily chart out here. And if we take a look at the daily chart, we come off the swing point low from August the 8th. That was at a price level there of 1882.75. We go up to the high that was put in on September the 19th, and that high out there was at 2014.50. We'll see that in the futures market, it didn't make it all the way down to that 0.786 retracement level. We did inside the cash index. We did not inside of the futures market. That price level would be 1910.94. You're traded 1948. The low of Thursday's session out here is out at 1918.25. Until that low gets broken, that low just simply becomes a level of support because of that morning star reversal signal that we saw take place inside of the market. That's what's going on its daily chart out here. If we go take a look at a 300-minute time frame chart out here right now, and why am I not getting a data feed out here now? This is troublesome to me because now I can't actually give why. That's weird. Holy cow. Well, I wanted to do this. I was going to put this chart up here. Now, I think this chart is correct with regard to the close at 9 o'clock, but I'm going to have to restart this or something. That's pretty weird. If we take a look at the 300-minute chart here for the S&P futures, we're going to do that as we came into this 9 o'clock close, 9 a.m. close out here. What you'll actually see is you'll see the formation of a hammer candle. Now, what's interesting about this chart here, again, this is the S&P futures. We know that they've been trading lower since 9 a.m. And what we know here is that the S&P futures, and this is a 5-hour energy chart. It's a 5-hour time frame that we're taking a look at. And we can see this little descending price channel from upper left to lower right out here. And when you break a price channel, what you really like to see, bullish or bearish, you like to see price try to get back inside that trend. In this case here, it was a downtrend channel. And that's in essence what really took place as this hammer candle was forming out here. Now, did it get down to the exact bottom of that, of the top, I should say, of that descending price channel? No, it didn't, but I'm using this really as a guideline, not necessarily exactness out here. So it's a pretty darn close out there. But I do know is that on a 5-hour chart that the ES mini, assuming that this really did close out at 9 o'clock, I'll have to reboot things during the breakout here and make sure that there's no problems. But it did form a hammer candle out there. Now, what else happened down at the bottom here of last Thursday? It made that really nice, this is the S&P futures that we're looking at, it made that really nice bottoming type pattern. And that is a bottoming pattern where we actually see price move lower with less relative weakness out there. Followed up by a bullish reversal, followed up by a follow-through candle. That's exactly what took place. Now, if we take a look at the market, it's only made 3 moves to the upside in its wave patterns out here. So price really just coming back and testing that descending price channel out here. So the S&P futures on the monthly, still bullish. On the weekly, still bullish. On the daily, still bullish, only coming back to a retracement level, trying to identify a bottom out there. On the 5-hour chart, also still bullish as it put in that nice bullish bottom down here from last Thursday. That is my view of the patterns out here. It wouldn't matter to me what we're looking at, what the actual symbol is behind the chart. It would be the same call no matter what as we go ahead and we do our analysis out here. Let me switch over and take a look at a 30-minute time frame. Let's look at the four time frames out here. Let me do that. The 4 time frames out here. Let me switch over to the ES Mini. And 4 time frames that we're going to look at. So we've got 30, we've got 120, we've got daily, we've got the weekly out here as we take a look at the S&P futures. What could take place this morning if the S&P gets below that 1945.75 level? Well, you've got an A to B equals CD to the downside that it could form out here. Your 1-to-1 price point, 1941. Your 1-to-1.272 price point, 1935. What happens if price gets down to that area? Well, I sort of covered it when we took a look at the daily chart, but let's do it here from the swing point low at 11:30 on August the 2nd up to the high that was put in here on October the 6th. That was yesterday at 9:30. And what you should see is right around that area, meaning in the 1938 range. That's between 1935 and 1941. What you would have is a potential 0.618 Gartley buy pattern. At the 1929 level, you would have a 0.786 Gartley buy pattern. So the bulls, even though the futures are lower as we speak this morning, the bulls are not out of it. It may be just that we're going to see futures move down to those levels in order to go ahead and create the next bullish Gartley buy pattern. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capabilities. capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow 132 trade out of 16,259. S&P off 14 at 1950. Composite down 35 at 44.18. Russell 2000 off 10 points at 10.84. DAX off 98. FTSE down 52. Goldilocks up $3. Silver up 7 pennies. Platinum up $13. Let's go check in on the metals out here. They have formed their bottom out here. Let's take a look at Goldilocks right now. Trade out of 12.10.80 as we take a look at yesterday's session out here, a nice little piercing candle. Of course, it was making lower lows with what? With less relative weakness out there. Right now, we can see as we take a look at Goldilocks trade out of 1210, trying to get back inside its market profile low. That's the support level. That bottom is at 1210.80. You're trading at 1211. Any close above 1210.80 out there at a minimum suggests at least a neutral stance, I would have to say, with yesterday's candle formation moving lower with less relative weakness than a bullish reversal signal out here with that piercing candle that is giving us a sign of a bottom out there, at least a buyable bottom with a stop that would be in place out here. And that's the message right now of Goldilocks. If we take a look at other messages that we're going to pay attention to inside gold, one of the things that you'll look at is just paying attention to the trend line out here. Let's just take a look at a most recent trend line. In this case here, I'll just simply start from the high on August the 14th, I should say. Looks like I dragged the red line out here. Let me just change colors for us. What color do we want for that line? Let's make that a nice little bluish type line out there. There's our little trend line. We'll go ahead. We'll keep that. I'll try to keep that in play out here on the chart. So we'll be watching to see if, in fact, gold can get above that. Get somewhere right above that level. But right now, which it also looks like it would run right into the resistance of its TAS market profile. So 1227 ought to be, well, you'd see 1217 as its next move and then 1227. But you've got a nice leading indicator bottoming pattern that was put in inside of gold. That was after completing a 1-to-1 A to B equals CD to the downside. This is the daily contract that we're looking at. Our 8-point inside Goldilocks, the March 17th high. That's out at a price level of 1390.80. Your B point was down here on the trading session of June 3rd. And that's out at a price level of 1241.70. Makes a 0.786 retracement, or very close to it. Makes a 0.786 retracement at 1347 on July 10th. The 1-to-1 A to B equals CD price point 1198.40. It looks like what it actually got down to yesterday, really Sunday evening, what it got down to was a price point of 1183.30. If you can get above 1210.10 out there, just any higher close today, what you really like to see, quite frankly, is a close above the high of this session here from Friday. And that high was at 1215.70. Get above 1215.70 and things start to look pretty rosy for Goldilocks out there. If we go take a look at platinum, let's look at platinum, because platinum has been the metal that had been crushed out here. Why is my daily chart not updating? I don't know the answer to that, but I can tell you that it isn't. It's trading right now at 1261 out here. It also gave us a little piercing candle as we take a look at platinum. Looks like maybe the contract has changed here. Maybe that could be the issue. Let's go take a look at silver. I'll take a look at it during the break. Let's take a look at silver. That's up 5 pennies, trading out at $17.28 as we speak right now. If we take a look at silver, it also gave us a bullish candle yesterday, a bullish engulfing candle out there. That's when the body of this candle, yesterday's candle, engulfed the prior session. Hey, what did silver do? Well, if we take a look at the open of October the 2nd out there, that was at 17.19, and yesterday's close, 17.22. It engulfed the two prior sessions out there. Pretty strong move being displayed here by silver. So we've got high-ho silver that also was making a lower low, doing it with less relative weakness, and now you've got a confirming bullish candlestick out there. If in fact we see it close above 17.72, that's its TAS market profile resistance level. It's high out there. You see it close above that. Well, we haven't seen it close above resistance really since the time frame here of July 10th. 2014 out here. So silver trying to make its way to reverse its change in trend out there. We go take a look at light sweet crude, not the same. It's down 61 pennies out here, but if we do take a look at crude, let me see here, as we're taking a look at the continuous contract so far, this key reversal session out here, this little bullish engulfing candle from September the 11th, that low is held as support. This here is the 4th day in a row that low of 89.56 is going to be tested out here. If it closes below that, let's put light sweet crude. Let me put it back on a weekly time frame. Let me just do this here. Let me change over to the continuous contract. Give me a moment to do that. CL, pound sign there. And we want to take a look at a longer-term time frame. So let's go see where some retracement levels are inside of light sweet crude. Light sweet crude, we're going to take a look at... coming back, really, let's come all the way back here. That would make sense to me. Let's come back all, and when I say back here, I'm talking June of 2012. And if we go take a look at from that swing point low to the high that was put in here in light sweet crude, that was back on August 26, 2013. You're below the 0.618 retracement level. It's a weekly chart that we're looking at. No bullish signs here, that is for sure. That says that likely to see a move down to about the 84.76 area. Currently traded out at 89.76 out there. And that is what's going on inside of the commodity marketplace. Let's go take a look at some things that are popping and dropping out here. Let's take a look at SodaStream. SodaStream out with a revenue warning out here. They say they're going to miss their Q3 revenues, and it's down 19% out here. SODA is the ticker symbol. Never a good idea to start off your morning with a soda. In this case here, that's proven to be the point out here. Trading down at 22.33, and SodaStream trading into and maybe below. Yeah, below. So nobody inside SodaStream is in, this is a weekly chart that we're looking at, is in the money here, so to speak. November 1st, 2010 is the swing point low. Looks like that's the date of the, or the week of the IPO, 23.15. There were 10 million shares traded on that session. So far this week, we've seen about 4.7 million shares, and it's only Tuesday morning out here. Does not look good for SodaStream. SODA is the ticker symbol. Also to the downside out here, let's go see percentage-wise. What do we have large percentage-wise? The Container Store, TCS. What a cool store that is, huh? That's if you like containers. But the Container Store not having a good morning, down 13%. Let's go see what the Container Store is doing. Oh, looks like another IPO. That does not look good. Does not look like there's many people that are being contained within the Container Stores. Everybody here is in the red. Looks like this IPO debuted right around the week of October 28, 2013. Nobody in the green. Well, maybe there's a shareholder or two who bought this morning at a low, but they'll probably get run over by the bears out there. Container Store trading lower. Also down by 31% out here, Christopher and Banks Corporation. Let's see, what did they provide here? They see their Q3 sales somewhere between 114 to 118 million, so they're cutting back their sales outlook, and cut back it is. A gap down with volume out here. Trading volume so far today, 336,000 shares. It's moving back. It's already moved back past its sign of strength out here. I'll pull it back a little bit further on the left-hand side. But Christopher and Banks did have a nice breakout session on June the 10th. 1.4 million shares on that breakout. This morning here, it's already done 339,000 shares in only 12 minutes of trading. Things are not looking good for Christopher and Banks. CBK is the ticker symbol out here. Let's put this on a little longer-term time frame. Let's take a look at the weekly chart and see what it is doing. Not a very good-looking candle out here, is there? Now, if we take a look at this, if it breaks through, you got some weekly hammers, or a weekly hammer down on May 5th, so that low is going to get under, it's going to be attacked, $5.84 out there. You get below that, and man, oh man, this thing could, the next real run, if this thing gets below, we're going to call it the 527-ish range out here, well, then its next area that it wants to target is about 322 to 475. It's a $6.30 stock. Do not try to short Christopher and Banks. It's just they have to go out of business for you to even make $6 on it. That is not what you want to short out there. Let's take a look at United Rentals. URI is a ticker symbol. They're off 4% this morning. I don't see any news behind it. Let's take a look at its daily, the weekly chart. I can tell you trading right into its market profile low out there. That, by the way, is priced out at 103.11. You're trading at 102.71. Let's take a look at the daily chart. Take a look at the volume behind United Rentals. This here was, I don't know if it still is, it may still be one of the IBD, one of the IBD 50 stocks out there. Right now, this is trying to take out a swing point, take on a swing point that was from October the 2nd. 2.4 million shares down there so far. You've done 289,000 shares, and that is on United Rentals. If it does take that out, it'll go ahead and form an A to B equals CD to the downside out there. If we take a look at that price projection, if it can bust out that swing point low, the A point is going to be your high, or what I would use would be the high here from the trading session of September 9th. 19th. Happens to match the market high, right? The low being October 2nd, and then that would be your B point. Your C point being right out here on October the 3rd. Your 1-to-1 A to B equals CD to the downside inside of United Rentals, URI, which gets you to about the $92.94. I'd have to say $92.94. $88 would be another level to target. And that is on ticker symbol URI. Got the Dow off 150, S&P down 15. Let's take a look at a couple things here that are moving to the upside. What's moving to the upside in this market here? Green Mountain Coffee Roasters, GMCR. I don't see any news behind this, but this is percolating to the upside. It's had a nice sign of strength in it on August the 22nd. It had volume of about 10.7 million shares, but that's really not what it's dealing with today. It's dealing with the swing point high from September 19th. That had 3.4 million shares. You've done 412 million shares in 15 minutes. 4 times 4, 1.6 times 6. Yeah, it's got the volume to easily take that out if it wants to. It's trading up against above its market profile high. Looks like Green Mountain Coffee Roasters. Let's pull this back and see. This looks like this is going to move into all-time high level out here. How about that? If we take a look at just a small A to B equals CD to the upside here in GMCR, that's going to take you up into a price projection somewhere around the level here of the number is, drum roll please, 153.58. 153.58 to 160.67. Looks like that's where ticker symbol GMCR, Green Mountain Coffee Roasters, is going to try to head to. We've got Chimeric, CMRX is the ticker symbol. That's up 7% this morning. I don't see any news behind this on its daily chart. It's taken out yesterday's high. Yesterday had volume of 6.7 million shares, a nice wide price. Well, not wide price spread. Certainly a nice accelerated volume a day. Now today you're getting the price spread out here. Let's go see where this is trading into, if we can pull this back further. So this was in a bit of a consolidation. It is now broken through that consolidation. It broke through that consolidation, quite frankly, back here on September the 9th. If I put the horizontal line across the top of the box out there, so that's at the $27 level. The bottom of the consolidation, we'll call it right around the $13 level. So you got a 14-point consolidation. That says right here you'd look at about 30. Well, if you had 14 to 27, what's that going to get you? 41. You're at $33 right now. Looks like that is where Chimeric, CMRX, is headed to. If we take a look at this thing here, broke its consolidation, much like we took a look at when we began the show looking at the S&P 500. It's a consolidation pattern. If we take a look at this, it broke the consolidation, came back, tested it, finally rejected it back on September 24th and September 25th. CMRX cruising to the upside. We've got, let's see, percentage-wise, you've got CalAmp, C-A-M-P is the ticker symbol. That's up by about 7% this morning, trading out at 18.52 as we speak. Let's see where CalAmp is headed to. This thing here has got some resistance for sure. So it's PS de resistance. That's going to be at this little downdraft session here that took place on July 2nd. We take a look at where that resistance level is. The primary resistance is 21.54. It has not made it up into that area. It's got a swing point up here in the September 12th time frame, up at $20.84. 21.54 should be significant resistance for CalAmp. In fact, they're very significant resistance. Why do we say that? Well, as I look back on the chart on the left-hand side, you can see that downdraft session from April the 25th out there. That had 5.7 million shares, and that was also at 21.57. So you've got some significant resistance for ticker symbol CAMP. It is a nice camper out there. What else do we have here that is moving to the upside? You've got GoPro. Let's go take a, well, no, let's say, hey, wait a minute here. You got 21% move. Let's see. Is this a buyout? No, it's not. They received another record order for something out here. This is ticker symbol EFOI, Energy Focus Inc. I think they are focused pretty well, so let's go see what they're doing out here. Now, this has got let's not really spend too much time on this. This equity here doesn't trade much in the way, or had not traded much in the way, well, still doesn't trade much in the way of volume. 27,000 shares, 28,000 shares. Yeah, we won't spend any time on EFOI, at least not at the moment. Right now, we got the Dow off 134, S&P down 14. My charts are still trying to come up, the one that I want to take a look at, and maybe they'll be up by the next hour. This is Steve Rhodes. This is TFNN.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely isn't that, folks. Right now, the Dow's off 136, S&P is down 15, Composite off 37, Russell down about 10 points as we speak. During the break, I saw an email come in and a question about the Green Mountain Coffee Roasters and whether or not there was a 3-drive to a top that was forming. Unfortunately, I don't know what time frame this individual was looking at looking at out here. But let's take a look at GMCR. And here is the daily time frame. Now, when you're looking for, maybe some of you might be saying, well, what the heck is a 3 drive to a top pattern out here? Well, let me try to explain it like this. First, when you're looking for a 3 drive to a top or a bottom, it's not a pattern that you want to force out here. I'm going to get rid of the A to B equals CD that I've got on my screen. Oops, I'm going to try to do that. There we go. One of the things that you're looking for is you're looking for 3 moves up, in this case here, because we're looking at a 3 drive to a top pattern, and you're looking for time to match, and you're looking for Fibonacci expansions between swing points. So as an example, just visually trying to see what maybe this person was taking a look at out here, just trying to, this is really kind of a bit of some guesswork out here. If maybe what the individual might have been looking at, maybe it was right around here, July 3rd. So if we go from the July 3rd high down to the low here on August the 11th, I'm just going to take my Fibonacci expansion ruler. So I'm going to go from that high down to the low out here. And what we'll see is you will see that price moved up to about a 1.618 expansion, and that was right here on the trading session of August the 26th. So that's what you like to see. You like to see an expansion of swing points, all right? And so that we would call our first drive in this case, if this is what they're looking at, the July 3rd high. Your second drive in here, in this case, would be the high here on August the 26th. Now, what would be needed in order to complete that would be another drive up, the potential third and final drive, and that would need to be a 1.618 expansion. So if we use that high out here on August 26th down to the low that came in on September the 9th, the third drive or the 1.618 expansion would get you to about the price point of 143.10. I believe that's below the price point objective that I might have provided to you, but let's just use 143.10. Now, that's just a price area that you would be paying attention to. However, let's go see if these 3 drives took place on, or could take place, because the third one has not set up, on equal time. Remember, what we started with is right here on July the 3rd. That's going to be our first segment of time. The second segment of time was right here, and that was on August the 26th. So that third drive, if in fact it goes ahead and completes around October the 17th at that 141 level, then the answer to that question, is there a 3 drive to a top forming, the answer would be yes. You want to have time match price, meaning Fibonacci expansions out there, but just because you see that pattern, that doesn't mean you go ahead and you take the short on that. You've got to take a look. You got to look at reversal signals. You've got to, and remember, there's nothing more bullish than a failed 3 drive to a top, nothing more bearish than a failed 3 drive to a bottom pattern out there. We do have Green Mountain Coffee Roasters moving higher on less relative strength at this stage, but with no reversal signals or anything in place out there, that can be resolved. Just as we can take a look at the ES Mini on a 30-minute time frame. Let's go back and take a look at that before we're off the air here real quick. When we began the show, we were looking at the potential of a Gartley buy pattern forming right around the price level of 1938. We've seen so far a price move down to 1939.75. It too has moved down with less relative weakness out there, but no bullish reversal signal. Folks, it is Terrific Tuesday. As always, thanks so much for spending your time with us here at TFNN. We absolutely love you. We appreciate your time, and we'll look forward to seeing you soon. Have a great Tuesday.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
is TFNN.